U.S. crypto policy may move from market structure clarity to taxes, where routine transactions can still create heavy reporting burdens. The tension is that legal clarity alone may not drive adoption if everyday users still face taxable events for simple payments and DeFi activity. Crypto taxes next now points to crypto tax rules as the center of the story, not a broad market mood. The first thing to separate is the event from the interpretation. The event is tax rules may follow clarity, and the pressure point is that regulation is not the only hurdle. That gives the segment a concrete test instead of a broad mood read. A viewer can immediately judge what changed, which actor matters, and what signal would confirm follow-through. Lawmakers described momentum around the Clarity Act, while Patrick Wilson argued that tax complexity remains a gating issue for broader crypto use. This is the baseline viewers need before treating the move as bullish, bearish, or settled. The number to keep visible is end of May. It anchors the scale and prevents the scene from drifting into vague sentiment. Moreno pointed to an end May goal is the confirmed frame, while Wilson called tax a gating issue sets the practical boundary. If later claims appear, they should be compared back to this frame rather than accepted because the story sounds urgent. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is property treatment. Crypto transactions can create gains or losses, forcing users to track even small transfers unless exemptions change. In plain English, the mechanism explains why the headline matters. For crypto tax rules, it is not a side detail. It is the reason the event can affect users, markets, or institutions. Property treatment creates many events is the working part, and DeFi adds cross-border complexity explains why the outcome is not automatic. A headline can move attention, but this mechanism decides whether the event has repeatable consequences or only a short reaction. The affected side includes payment users, DeFi participants, businesses, tax software providers, and regulators trying to make compliance administrable. This is where the practical consequence sits. The story is narrower than the whole crypto market. It focuses on Clarity Act, crypto tax rules, and the counterparties tied to the same path. Small payments face reporting friction is the exposed side, while users need simpler compliance. That prevents overreach. The segment does not claim every token, chain, user, or institution is equally exposed. What remains unclear is whether Congress or regulators will create a de minimis exemption or adjust IRS guidance before adoption frictions deepen. That distinction matters because traders and users can overread a first move. A useful viewer should not fill that gap with a prediction. De minimis relief is not settled, is where evidence stops, and policy relief still needs specifics defines the proof that would make the next claim safer. That keeps the uncertainty useful. It tells viewers exactly which assumption should not be treated as fact. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is whether the Clarity Act timeline holds and whether tax reform proposals follow with specific small transaction relief. For crypto taxes next, the closing read should stay tied to the next observable signal, not a prediction. If that signal appears, the story gains confirmation. If it fails, the market has to treat the earlier move as incomplete. The practical close is small transaction rules are the trigger. That keeps the ending tied to a measurable signal instead of implying a guaranteed outcome. It is the readout the viewer can carry forward after the card ends and the next market or policy reaction begins.